Hello, hello everyone. Good morning, good afternoon, and 你好啊！我見到你哋嘅留言㗎，係因為我想多啲觀眾可以聽到，所以我就用英文去講。So market is gapping up higher today, but I'm not feeling really excited about it because like ARC now is still under the 9 EMA, and also the series, the SMH and SOXX is still under the 9. It also closed below the 21, which I don't like it. So hourly, the EMA starts trending down and starts the 21 cross below the 50. So generally, when the indices tries to climb higher, those tech related names may face some pressure when they try to climb above these declining moving averages. And cryptos looks very weak. Looks like they want to go lower. I will be looking for the crypto shorts, I think. Solar, despite the fact that Friday the reversal is pretty hard, but today is now gapping up above all the EMAs. One of the strong sectors right now. So right now, I think the satellite or the aerospace theme is one of the leading theme, and then also the wheat stocks have a good move last Friday. Oh, I hate these reversals. I really want to be bullish, but I don't. These reversals are looking so bad, and if you ask me now, I am very regret that I sell Tesla last Friday, but it is what it is, and of course, I'm now um I'm not I'm not frustrated, but just I don't like the gap up of Tesla today. I'm feeling it's trying to break out today. But yeah, I still made a lot of mistakes, so I also need to improve a lot, I think. Yeah, let's see, maybe a pullback short. 1 times 2. 1 times 2, I don't know. This IRBT gap down by 70%. I think these examples are always reminding us the gap down risk is really an important part of trading. So especially for the small caps and the micro caps, the gap down for more than 30% is quite common. So for stocks less than I think 2 billion market cap, I will be using a smaller position size, and also I take profits a little bit more aggressively, or you can just avoid trading those crappy names. Well, these reversals are nasty, and the volatility starts spiking higher. The range of the candles is pretty wide since last Wednesday. What is this? Oh, it's a bug. Okay. I don't know. I really like IBM. I really like how is behaving and performing past few months. If I'm an investor, I'm going to this may be my the top three positions if I'm a investor. I mean a long-term investor, but it's too slow for traders. It's too slow. I also like IBM's story. like the quantums and AI, and how I think like it's transforming from a very traditional tech giants from a more to a more innovative, and may become the next next leaders, one of the leaders of the AI revolutions. Maybe the weekly of hymns is looking so bad. Looking a looks like it's going to enter stage 3. I mean stage 4. Huge, huge topping. What's that called? Triple top, quadruple top. I don't know. You guys can see there are so many clean breakdowns. They're rejecting from the EMAs and then close very, very weakly, almost near the low of the day. So if I'm rather than selling Tesla, I'm more frustrated by not taking the shorts. Maybe I need to start practice having both long and short position at the same time. Like those rejections are so clean. And there are a lot of them, and they'll have a lot of follow through. Oh, I cannot believe MicroStrategy is going further down. How is that possible? Right is also a idea, but it can also be a long idea if it can go sideways and then hold above the 9 for a few days. But now is a short idea for me because it's staying under the 9 and 21 for the second week. Close below the 9 and 21 for the second week. And those wicks, the rejection on the 9 is clean. It's selling there is definitely some selling around those areas. AE will be a very profitable short if the market stays weak. I'm going to short any bounce for this BE if the market stays weak. Oh my god, these red candles are so nasty. Palantir is surprisingly very well. Oh, SNDK is ready. SNEK for the bounce on the 21 and the 9. Hopefully going to 18 to 19 area on the 21 or 50. Hopefully. Oh my god, I'm muted. I'm sorry, guys. I'm talking to myself for like 20 minutes. What? Oh, I talk a lot. But 50% of that is complaining that I can't get a shot of the cryptos, crypto names. So it's fine. Nothing valuable. Yeah, today is pretty. Looks like it's pretty weak, and now everything is going down. So I'm not going to short them from here. Also, I don't have profit cushions from my newly opened short positions, so maybe it's good for missing those crypto shots. Maybe they're going to come back 1 hour or 3 hours later. Yeah, why did I sell my Tesla? What can I say? Panic sell, right? Now, other than panic sell, I think another reason is I don't like the reversals. I don't like that many strong reversals of other stocks. They're rejecting from the resistance, the declining EMAs or the previous swing highs or swing lows. And actually lots of them that the EMAs are starting to trend down. And the 9 is under the 21 and the 21 is under the 50. Which is not favorable, which is not bullish. And I'm not and I'm not good at trading both long and short position at the same time. I tried it earlier this year, but it's not working well, so I avoid it, and then I sell Tesla. Ah, this Tesla. Yeah, most of my ideas today are working pretty well, but can't get in. I want to get in maybe 3 or 4, but yeah, I think 2 position is decent also. And ARK is rejecting, fading from the declining EMAs in a 1-hour chart. Also on the daily too. Yes, I do deep dives to learn the setups, learn the entries and exits, and how stocks reacts to the EMAs, or how long they're gonna base, etc. So I basically just, for example, I traded RNQ today, and then I will start looking at scrolling all to the left. And then, for example, if I will so my approach will be, if I'm trading in hindsight, so where is my potential entries, or are there any the first thing that I look at would be the setups, like the tight range, or like the really textbook setups. But actually there aren't a lot of those textbook perfect setups for the 5-star, the A+, the really good one. They're very rare, and I would recommend don't only focus on the perfect setups. You can also try to experiment or explore like the other potential low risk entry points. So for example, with this IONQ, if you're trading there is no like the 5-star setups here, I think. If you're buying on this day, on this I think it's EP. Yeah, this day is an earnings day. So if you're buying this breakouts, either you're buying it at the opening range highs, it may work, but yeah, it may work. I get the 1-hour chart. Yeah, so if I'm trading it in hindsight, I think the best entry would be the breakout of the previous 1-hour bar. So right here, for around 1.7% stop, or the opening range highs, 1-minute opening range highs, or the 5-minute, I don't know. But yeah, I can't zoom in for the 5-minute or in the 1-minute, but I think 1-hour breakout for of the previous bar high is a pretty good one for this example. So if you study for 10, 50, 100, 500 examples, then you can have a feel, or you can actually have a data for which entry tactics is the best. You can use the 1-hour breakouts, or the 15-minute breakouts, or the pullback on the 21 EMA in the 1-hour chart. So if you have 500 examples, then you can find out which one is standing out. If you're buying at the previous day high, then it will be a 8% stop, which I don't prefer. I'm not saying it can't work, or setting a wide stops is not okay. That's just not my style, and I do think setting a tight stop has its own edge. of course has this disadvantage too, but yeah, you have to develop your own style. And then after this leg higher, and then there's a strong downtrend, and you can observe when is the possible short spots or entries during this downtrend, and you can see the RNQ is reacts to the EMAs pretty clean during this downtrend. Especially I think the best you can see this rejection from the EMA 9 and then starts breaking down under the 21 and then bounce back to the 21 and the 9s and then gets rejected and lose the 50 and bounce back to the 9, 21 and the 50 and then gets rejected for several times and then goes lower and for a strong let's say maybe 30% or 40% move. And right here you can see another downtrend. It bounced back to the 50 when the EMAs is trending down. 9 is under 21, 21 is under 50, and it bounced back to the 50, then directly gets rejected. But this one is a little bit harder to trade because there's a gap down for the next day. So I think it's here. Yeah, this is a little bit harder, even in hindsight. So the best I think, yeah, the entry should be this bar. Maybe the opening range lows after the gap down. Probably the opening range lows after the gap down. So if you study several hundreds examples, then you can develop like a sense, oh, is this gap down shortable or not? Or should I wait for the gap down or not? Generally, from my experience, this type of gap down is shortable, but the win rate is compared to these ranges, a 1 day bounce is will have a lower win rate than a maybe 3 to 4 days or maybe even more days of a small base or a flag before getting rejected or keeps getting rejected from the EMA. This is just a 1 day bounce, but it's still tradable. The market is all fading pretty hard today. Yes, I do go back to look at the. I normally go back look at the 1 hour only because 15 minutes I have to scroll back. I'm not sure whether they are available. If you are studying, it's 15-minute chart back in 2020. Let's go back to 2020. Not available, and then you have to go back. So really back, really far back. But generally study the 1 hour charts only. But sometimes for if IONQ just pops up in my watch list last month, there is a I want to go back to study this entry on September. Then I may go back to the 15-minute, like to go back to this lower time frame if the if it's not that far away. Oh no, I missed this pullback shot, and I hesitated at this candle because I wanted to go a little bit more, like it touched the 9 EMA, but it never did. Oh, then it goes straight down. No 4 hour. I don't look at 4 hour chart. Yes, I don't look at 4 hour chart, but you can. If you want to study 4 hour, go ahead. As I said, like 90% of the questions, there's no model answer. There's no black and white answers or wrong or right or wrong. you can have your own approach or your own style, but risk management is so important. You have to manage your risk. There's no second answer. OKLO 9th of September. Yeah, for OKLO, this one, the special part is under 9 and 21, although and they are really tight, really packed close to each other. So it definitely it has a lower win rate than the breakouts above all the EMAs. If these two candles is above the 9 and 21, this is a 5-star setup. I think Christian would comment it as a 5-star, I think. I don't know. But it's under the EMA, so it's not that perfect. But I really like this inside day, and also the two reversals from the 50-day. And I'm not sure, but if you go back to September, are there any relative strengths for OKLO? I don't think so, but but yeah, I do like, and also the weekly too. I think the weekly looks so good. You can see there's a flag for 5 to 6 weeks, holding up the surfing the 9, and it's setting up together with the quantums, I believe. Yes, his quantums weekly is looking inside week. If I think you can see it's a up with handle or VCP, or just a bull flag or anything that you would like to call, but it just looks bullish, and it's serving the 9 weekly perfectly. And now you can also see the quantums. They are losing the 9 and 21, bounce back to the 9 and gets rejected. So the price action on the daily may also works in the weekly too, and 1 hour too. CSTL. Right now, I don't want to take the long setups, and buying from here is a little bit risky, especially in this environment. If the market is super strong, like it's a very strong, super bullish market, then if you're buying at the breakouts of the previous day high, then it is a possible entry, but not this market. So crypto bounce back to the 21 and then starts fading. I expected to bounce to the 50, but it didn't. If it hasn't touched the weekly 9, even the weekly 50 yet. Yeah. If it bounced back to the 50, then the entry would, like the win rate would be much higher. So for example, like Bitcoin, this pull back to the 50 or this pull back to the 9 generally have, in most cases, it reacts. So there's a 20% flush down. This one is much larger. Ethereum is more choppy, but you can still see some rejection from the 21 and the 9, and also this rejection here. When the 9 is under the 21, they pull back to the 21 will have a very high win rate for the shorts. SNDK, so it all starts from the daily. Yesterday, on Friday, strong reversals to the downside, a breakdown candle, lose the 9 and the 21, and also lose all the lows from the previous base. And then today is a green open, trying to bounce to the declining 21 and 9 day. So on the 1 hour chart, 1 hour chart, as I've said before the market opened, it would be better to bounce back to the 218 to 218 219 area. But I saw the 1 minute candle, the huge reversals, this huge red candle. Then I think it worth a try, and then I took a shot after I see this candle. Because generally, when you have this huge green candle, you won't have a such a huge red candle just behind this huge green candle. But all starts from the daily chart. And now still there's still plenty of stock which is holding up nicely. Oh, straight down this APLD. So if things sets up again, it's possible to take a but I think it needs more time. But yeah, I think they need more time. For example, this Rocket Lab, if it can base for 1 or 2 months above the 9 weekly and the 21 weekly, Raytheon is so strong. Oh, and Puffs. Did it close below the 9 on last Friday? 17.42. Okay. If I didn't sell it last Friday, I will be selling it below when it breaks down the Friday's low. Especially in this kind of a divergent market condition, I would be selling more aggressively, like to protect my profits more aggressively. If the market is stronger, then I may allow it to pull back a little bit further. Oh, I also missed this riot too. But yeah, this is how far the stop 2%. This 9 EMA pullback could be one entry because it's coincides with the swing lows. Yeah, the gap down risk, I've mentioned it a little bit early. Oh, what's this? IRBP. This gap down. So for the small caps and the micro caps, I will reduce my position size. And if you are very if you can't handle the gap down, like you really hate a 10% gap down or a huge fluctuation on your equity, then you can sell your profits more aggressively, sell more into strengths, and reduce your position size to a level that you feel comfortable when you're down maybe 10%. When the stop gaps down 10%, you can gradually adjust your size to a level that you feel comfortable. You can't eliminate the gap down risk. You can only adapt to it, because you can also encounter gap ups. I think this is the end of today, because things are just going straight down, and there's no point watching them. You're not taking longs or shorts here. So that's it for today. See you in the next stream.